Okay, so Tuesday pre-market live stream. So for those of you that is Yoan, good to see you. For those of you who's your first time here, we do a pre-market live stream on the US market. We cover the top movers for today. Ironically, there's not some gangster movers today. And kind of not surprising, we had a very strong session yesterday in SPYs, Qs, everything just kind of moved up, option positioning moved up. All the strikes and levels all moved up. So with that, we're kind of having a little bit of a settling down, kind of into a new range, feels like. So not surprising we're not seeing a whole lot of movers on the small caps. So mid caps and large caps, they're going to be, we suspect they're going to have some strength today. Might be a little bit of a pause day today, kind of like, after a strong rally on a Monday. Usually the strong rallies happen Tuesday, Wednesday, Thursday, but after a strong rally on a Monday, after the Easter holiday weekend, kind of that pent up buying interest from quarterly results and then also the March payrolls. I feel like now we might have a little bit of a settle day with some light movers, but I think the strength is going to continue throughout this week. And I think everything is going to be supported on dips. That's kind of what I'm seeing in the markets right now. So we're going to take a look at SPYs, Qs, Bitcoin. Then we're going to look at the top mover of the day. There's only really a couple, and then the others just don't have the volume. So the small caps aren't attracting as much volume as they used to. And I think that's going to be a trend you're going to see, going into this quarter. So let's take a look at SPYs. SPYs has broken through the sacred 400 barrier. I'm making fun of a president who used to talk about stock market prices as if they were sacred. So now that we've cleared 400 on the weekly, SPY is at all-time highs. It basically means now that 400, being such a big strike and option strike and everything like that, and there's not a whole lot of puts in the market in terms of open interest on SPYs. There's just very little puts in the market above 400. So it basically means that now that we've cleared 400, not a whole lot of option players are suspecting that they need protection right now. And that could be a good thing in the sense of there's no downward pressure on the market or, hedging activity that has to go on with that. But the bad thing on the bad side is if the market does sell off, it means that nobody has protection right now when it's cheap. So usually when nobody has protection is usually when it's the cheapest. And the times that the protection does become expensive, it's usually when those people that didn't have protection need it. But right now, I'm just not seeing that. I'm seeing the markets being supported above 400. So I'm a buyer on SPY on dips. And looking at the 400 or looking at the 4-hour chart, and kind of see I kind of want to expand it a little bit and get rid of these levels. So we can see that we have this channel, very wide channel going on. And we're now at the upper boundary of it. And so I think if we continue to press up in 408, 410, then we're probably going to get a pullback. And I think anything to 400 or even 398 is going to be supported. And I'm a buyer. I'm a buyer on SPYs right now. It's hard not to be a buyer in SPYs. I don't think we're going to have a huge session today. I think it's going to be a less than 1% up or down kind of day after the strong just rip to the top of this channel here. The one I'm a little more interested on is Qs. So Qs, SPYs is above its prior all-time highs. Qs, on the other hand, is getting there. So I think Qs is going to run into some resistance around the all-time highs at 337 or 340. And then I think what it's going to do is going to settle into kind of a corrective structure / range at the top here for a little bit with a bullish bias. So now that Qs have kind of cleared this, was that 5-week, 5-week resistance, resistance, couldn't lift off resistance, decent 2-way action, strong bullish action, now cleared it. I think now this becomes support on pullbacks. So I think 324 to 320 is now your new kind of base of support. And I think Qs will probably find resistance for the first time they hit 340. We'll get a little bit of a pullback, and I would be a buyer on the pullbacks on that. If we get dips say today or tomorrow into 324, then I'm a buyer on it. Tech though is definitely rallying a little bit. There was kind of just some pent up demand in it, and it needed to clear out some resistance hurdles in it, and it did that 5-week resistance there at 324, 325. So it's really cleared that out. And once it kind of, settled above the monthly view up, it just kept finding dip buyers, dip buyers, dip buyers. So Qs is in a strong place right now that is lifting tech, and that's lifting a lot of boats right now. Bullish on Qs across the board. Bitcoin stabilizing as we've kind of predicted near the highs. It needs to continue this upward pressure. Bitcoin looks very strong right now, and I'm liking this structure a lot. So the dips, bought. Now monthly view up is holding. So if this can play inside here and continue to build up higher lows, then we're building pressure for another breakout. Personally, I would love to see a decent dip in Bitcoin from say 60 down to 50, because then I'd like to buy Bitcoin in a dip. I'm not crazy about buying it on breakouts right now, even though I like the structure. I really want to buy Bitcoin in a dip. I also want to buy Mara on a dip. I watched the interview with the CEO, Marek Okamoto, on Benzinga. It was a great interview. If you haven't seen it, go to their channel and watch it. And I was really impressed with the caliber of his understanding, not just of his business, but he also has a lot of experience in trading and in financial markets. So he actually is the president of a fund himself. And he's very aware of the option and the stock positioning going on in Mara. And he knows his market and he knows markets. And it's a very good combination for a CEO. So I'm bullish on Mara as a stock. And Mara is probably they're a Bitcoin miner, and they're probably one of the better stocks out there to play Bitcoin as a proxy, except you're kind of going for the mining thing. So with Mara being at 57, I'm waiting for a pullback on Mara to 50, and then I'm going to be a buyer. I like buying Mara on dips. It tends to kind of break out, consolidate a little bit, and dip in that, break out, consolidate a little bit. Now it's broken out again. So I think it's going to consolidate and find $50 again. And I think if it hits $50, then I'm going to become a buyer on this one here. So I like their business model. I like their plan. I like their approach. The CEO is doing a great job. I'm very bullish on Mara. Okay, so top mover on the day. Hello. More people roll in. Jackson, good to see you. Constantine, morning to you. And Stefano, good to see you as well. Okay, so top mover on the day, which Wall Ball called out, SJ, Cyan Joy Holding. Okay, I'm thinking it's some sort of science play. Let's see what the news. Is there any positive news catalyst? Cyan Joy announced a strategic alliance with Snip Interactive to launch new loyalty and reward system and to explore Bitcoin. Need a bump in your stock price? Mention Bitcoin or NFTs. That's all you got to do. My friend has a company that's probably going to be going public pretty soon. Once he does, I'm just going to have him do a press release like every other month on like Bitcoin NFT, and just watch the stock price explode, and hopefully I can cash out. So their earnings were out on 24th, which were strong, but let's see if I can find any other recent news. Current volume of 48.3K is 1,000%. Okay, so let's take a look at SJ. Let's see what's going on, SJ. I want to see what's up. Any other news out of SJ? No. Okay. So other than this, that's it. Okay, I'm a little skeptical of stocks that just announce NFT or Bitcoin holdings, because they may get an initial pop, but they don't tend to hold those pops. So let's mark the pre-market highs. I usually like to go to the 5-minute first, mark the pre-market highs, and then check out where that resistance lies on the weekly. That resistance lies above all the other price action. So all-time highs is in pre-market 15. We're at 1436. We're holding near the highs. So this sucker has gapped how much? A lot. Okay. So SJ gapped a lot from $9.15. That's a pretty big, I mean, it's 50+% jump. Is there options on SJ? There is not. Okay, there's no options on it. So that is where there was a base of resistance before. Let's check out intraday charts. So 5-minute structure is very good. But when I look at the weekly, I don't see like a volume buildup. Like here, there was a volume buildup, ironically, into a sell-off. So people are buying the dips. And so if you look at the history of the stock, it rips and fades, rips and fades, rips and fades, rips and fades. And there's no volume buildup. That means there isn't like new interest coming in. Institutions aren't like starting to take more notice of this, pass the word around, more people start to pile into it. We're not seeing that. We are not seeing that. So that makes me a little more skeptical on this play as well. The intraday charts look great. Like the 1 hour looks great, minus these 3 rejections here, but it's building. You can see the structure is clearly building and the resistance is clear at 15. So we have 1 hour that looks good. And the 5-minute is also looking pretty solid. But yeah, okay. So with that being said, it's kind of what we got going here. It is holding near the highs, positive. Temporary positive news catalyst that I think will fade after today. Structure on 5-minute, good. Above prior all-time highs, good. And so far it's holding VWAP. There's clearly a resistance at 15. So I think I'm going to want this pressure to build. I'm going to want VWAP or at least the purple line, which is the 20 EMA, to hold on pullbacks. If that fails and this kind of basis support at 13 fails, then I probably wouldn't touch it till 12 or 11 prior support. This could be, if it struggles here, this might be a decent short at 15 for a move down, because you could have a very tight stop on this one here, 20 cents, maybe 30 cents in my opinion. If I was going to play it, that's kind of how I would do it. And so maybe a short 20, 30 cent stop, see if we can get it down at least $1, potential 3R on this one here. And again, if it loses kind of 13 handle, then I think you're looking at 12 and 11, where at that point, it might be a decent buy, at least just to see if it can hold this prior base of support. So, or which was resistance, which should act as support. So you got here, 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 and here. There isn't a whole lot of price action on this stock. So that would be a very wide range to play from though. Same thing though, if I'm going to buy it at 11, I'm going to have a pretty tight stop on this one here. And I'd want it to return towards the prior highs to make it worth it. So it's got some positives. I don't think this news catalyst is going to last beyond today. So plan on being quick, grab your lunch money, get out, kind of thing. That's how I'd be playing this. But so far the 5-minute is looking pretty good. It's looking like it wants to build. What is pre-market volume though? 3.7 million though. So the stock normally only has 6K on average. So it's a stock that doesn't have a whole lot of interest. And right now it has a lot of interest. Yeah, it'll probably ramp for this pre-market. And then if it starts to fade early on in the session, then it's kind of done. But if it breaks 15, like if it hits this, pulls back, bounces off VWAP and breaks, then I think there's potential for a short-term run, and then get your lunch money, get out. That's kind of how I'm looking at this one here. Okay. Let's see here. Johan's got a good question here. It's a very good question. Could Coinbase IPO change things? I think it's going to. I like Coinbase IPO. I would be a buyer on that IPO. I really like that. When is Coinbase IPOing? Does Coinbase IPO have a date yet? 14th. 14th. Okay, let me set that on my calendar. I want to be involved in that one. 14th. Okay, next Thursday. Coinbase IPO. I like that. Okay. If it's going to IPO the way a lot of them have lately, it's usually been happening around 10 a.m. Pacific, 1 a.m. or 1 p.m. Eastern. A lot of them just been happening after 10 a.m. So I'm liking that. So will that change things? For sure. It's going to continue to attract more and more interest. I mean, I think it's going to be the first Bitcoin exchange that you can actually invest in with a public stock. So I think there's going to be a huge rush into that stock. I'll definitely be day trading the IPO, and then I'll probably leave some position on to hold it for a long-term thing because I like Coinbase. I'm going to call my broker today, though, and find out if they have plans on when they're going to do options on that. I'll be shocked. I will be shocked if they don't have options ready on a Coinbase IPO within the first week of trading. Sometimes it's available immediately. Sometimes it takes a few days, but like the last big IPO, Roblox, it took like it IPO'd on a Thursday, I think, and by Tuesday it already had options ready to go. So I think once you have the stocks public to be traded plus options, I think you're going to see a big boost for the whole space. It's further legitimizing the Bitcoin space. So yeah, very good point. And I'm glad you reminded me of that because I've been wanting to trade that. Javier is saying, did you see Barron's article on GBTC turning into an ETF? No, but I've known about that for a little bit. They've been talking about it. Plus, it was also on the Benzinga webinar with the CEO of Mara, Mariko Komoda. He was talking about it as well. So I've known about this for a little bit. I'm very positive on that because I would rather trade GBTC as an ETF versus a trust. I think the difference in like premium will probably go down a little bit. I think it'll be a more accurate way to trade Bitcoin. Instead of buying a $60,000 product, why not buy an ETF that's $30, $40, $50, per share? So I think it'll be a far better way to trade Bitcoin. I'm very excited about that. So I've traded GBTC before. I am curious though, how they're going to adjust it if they turn their current holdings into an ETF. Are they going to reprice it? Will it change the per share thing, how it works out? I may want to be owning some GBTC going into that, or I may not, depending upon how they're going to do it. So I'm going to need to, hopefully I can find out some information about what the mechanics of that process will be like. David Alphaeus, if I trade Forex on the daily or 4-hour chart, do I need to pay attention to fundamentals? Yes, but only the majors, only the major news announcements, the highest economic impact. And I don't mean like there are many calendars out there and they'll say high economic impact. And I'm like, yeah, right. It's not really that big a deal. But any sort of economic announcement that tends to have a good pip range within the first hour of that economic news report coming out is a high impact thing. If the market doesn't have much of a pip range after that economic news announcement, it's not that important. So just be aware of the major news impacts. But as long as you're understanding what's going on with the US dollar and interest rates and flows and the major economic news things, you don't really need to have a gangster attention span on fundamentals. So yeah. Wallace saying, I believe that options become available once liquidity parameters get met. Yeah, that's standard. That's standard practice. That's why it usually takes a few days. It also needs time for the OCC, the Options Clearing Corporation. They need time to kind of get things set up. Oprah needs time to get things set up. So not Oprah Winfrey, but OPRA. So yeah, it takes time for those things to get set up, see what's going on, and then be able to start pricing. Yeah, for sure. At first, the MMs market makers might improperly price the options. That could be. Yeah, that happened on Roblox, and we took advantage of that. That happened on with the Roblox thing. We did the ratio spread on Roblox, and part of that was because generally when a really hot stock goes IPO, the pricing is just not there yet. They don't understand how it works out. And so we did a ratio spread where we bought the at the money calls, sold further out of the money calls for double the amount, knowing that those things are probably have super high IV. And once everything settles down, Ivy usually calms down. And so you make money on volatility. And if you can make money on the direction, all the better. You have two incomes right there. Or two ways, not two incomes. You have two ways to make money on that. So you have the volatility, you have the direction, and you get theta decay with that. We made a ton of money because those calls that we had sold that were deeper out of the money, I think within the first 48 hours, they were just, which is what you want. You want that to happen. So yeah. Okay. A few more questions, and then we're going to look at some staples. Jeffrey Banker, is good to see you. You are looking for gains, positive gaps in your scanner, but shouldn't we scan for pullbacks instead to trade the gain gap before it happens? The first thing I'm actually looking for, Jeffrey Bankers, is volume. Volume tells me interest. Volume is what tells me whether there's institutional interest or not. If there's no institutional interest, pullbacks don't really matter because the pullbacks aren't going to be bought. If there's institutional interest, then there is a higher chance that those pullbacks are going to be bought, that the stock is going to have a good range on the day that it's going to move. So the first thing I actually look for is volume. That's my first and most important stat, is I'm looking at who has enough pre-market volume that they're attracting enough traders. Otherwise, the pullback doesn't matter. Yeah, it's an interesting question. It's a good question. David Alpheus, what camp are you in? What camp are you? I'm in the Tahoe region, so we camp outside here a lot in the Tahoe National Forest. Camp number one: scaling in to scaling out, both sniper one shot take. All of them. I don't have just one fixed approach. That's kind of like having one speed limit for a market that has constant changes in speed limit. So I don't believe in that you should have just one fixed approach, like scaling in. There are times that I will do that. There are times that I'll take a starter position in something, and then if it starts moving, then I start adding in. And if it fails, then I'm out for a smaller loss than usual. There are times that I will scale out, like I'll start large because I feel really strongly about the stock. It's got all guns blazing. So I want to have size right off the bat. There are times that I want to do that. Both. There are times that I want to do both. There are times that I will scale in and scale out. So I'll start to build up size and then start to phase back size. Sniper one shot, take profit. I probably do this the least, because if you get really good at reading price action in real time, you can see trends building. You can see trends increasing momentum. You can see momentum holding. And under those conditions, just having one shot, you're not taking advantage of the micro trends within that larger trend. And you only have one bullet to make you money. And you have to nail the entry and you have to nail the exit. Whereas I look to trade a situation that looks good, but if it continues to enhance, if it continues to grow, if it continues to build, then I want to keep adding to that position. If I feel like if I've added into a position and then it starts to slow down, then I want to start to phase out of that position. Market open. So yeah, I think of all of those, the sniper it requires the greatest precision. It has the least amount of flexibility. And for someone if you got the skills to read price action in real time, then you wouldn't do that because you'd be limiting the amount of money you can make. So yeah. And then the last one is manually stop moving. All that too. I will manually adjust my stop. If I get into a position and it starts to look bad right off the bat, I will just start adjusting the stop. I will start reducing risk naturally. And if I'm in the position and it starts to run in my favor, then I will start to manually adjust that as well. So yes, all that. Jake Oy, BTX, first call out. Actually, that goes to Wallball. He had the first call out. He had the SJ call out. Let's take a look. BTX. Jake, are you technically sharing a setup from our course? I'm just checking. I know you're trying to do it in code, but yeah. Okay. So you have the overall thing in play. I have to kind of talk in code here, Jake, because you're kind of mentioning something from the course that I don't talk about publicly. So you have some of the conditions in play. I'll leave that up to you. The volume looks pretty. I don't know what is BTX showing up on the volume scanner. It is not. Why is this blank? Let's try it again. Oh, BTX is a crypto. Is that what that is? No, it's not. Brooklyn Immunotherapeutics. Why is the data not showing up? That's weird. Huh. Okay. Yeah, I think you have at least some of the minimal conditions in place. And even though the volume looks good, it's not showing up on my volume scanner. So yeah, let me switch to regular now, but that's kind of what I'm seeing right now. Okay, let's see. David, I've seen your pyramid. David, you're saying you've seen my pyramid. Which pyramid are you talking about? The one I have in Egypt, which pyramid? And he's saying limit order videos really opened up my mind. Good to hear. Yeah, it's a hard habit for retail traders. It's a hard habit for retail traders to kick that because the narrative was so strong. You know, in 2000, mid 2000s, mid late 2000s, and then the first 4 or 5 years of 2010 decade to 2020, the narrative was virtually the same. The marketing narrative was virtually the same, which is that you had to wait for confirmation price action signals that took the form of like a pin bar or something like that. And we pretty much debunked that. And we were like one of the first people in the price action space, the price action context space, trading price action order flow to say, there are certain things to those patterns, but they have incredible limitations, and trading candlestick patterns or 1 and 2 bar candlestick patterns is not trading price action order flow. It limits your skills. It also gives you bad entries. And so we came out against that and said, look, there are certain things that are valuable about that, but there's huge limitations, and the limitations are far bigger than the benefits. And so if you understand price action in real time, if you understand order flow in real time, and you can read price action context, then you're not going to take those worse entries by looking for those confirmation signals. And so that narrative was huge from the last like 08, 09, 2010, all the way up to 2014. And then the narrative has started to die down. And now most new traders don't even know about that narrative. So, the people that were waiting for confirmation, you're wanting certainty in a market that certainty doesn't exist. The only two certainties in the markets are, one, at least for right now, order flow is the most proximate driver of price action. And two, as long as there is order flow and imbalances in the order flow, there will be directional movements. Those are the only two certainties you can have in the market. The rest are all probabilities, and you have to think in probabilities. So yeah. Yes. Okay. So if I answer that, Wallball said, you even said in your most recent video, skills adapt, fixed rules don't. Exactly. Skills and experience adapts, fixed rules don't. Okay. We're going to do a few more minutes, and then we're going to wrap it up because I got to get to open trading with the members. ORCL, Oracle Group. Oh, okay. I haven't checked in Oracle in a little bit. Any other movers I need to worry about? Okay, not yet. So Oracle, bullish, 4-hour and long-term. I'd be willing to buy this pullback, let the volume pour in. False break sells in, but with increasing volume, I think it was a surprise. Okay, so it's first time we took it weekly. Hard not to be bullish on that. I know, what's his name? Larry Ellison. He just moved to Hawaii. He lives on the 6th largest island, I think, 6th or 7th. And that island, he owns like 80% of it. I forget the name of it. It's one that people generally don't travel to. But I like the structure on this. I probably like a pullback. There is a building, but since it's a second touch, like first touch, second touch, I tend not to take the breakouts on the second touch. So I would probably want some sort of pullback. Let me see what kind of volume does Oracle do on a average 10-day volume is 13 million. It's not bad. It's not bad. Not gangster, but it's not bad. Okay, so let me check some open interest and see what's going on in options real quick. Puts are outweighing calls right now, 2,300 to 1,700. So probably as we're getting close to resistance, dealers are probably, stepping up. Plus also longs are probably protecting their position. Okay, nothing gangster in terms of options. Like options is not a huge, like there's not a lot of volume just rolling out right now, but it's decent. With that being said, I feel like buying a pullback to support. I think the first area I consider long would be about 70 and then 65. Yeah, 70 and 65 would probably be my pullback levels. Let me look at that on the 4-hour, which you mentioned. Zoom out a little bit. Really good base at 60. Yeah, between the 66 and 65, that's a really, really solid base. So, and then you have, okay, so we did market well on the weekly. So on the weekly, we spotted the intraday levels, which you can see right there. So 70 is not bad. 70 is not bad. I mean, right now you got an impulsive corrective into support, impulsive corrective. It may want to try and rip, but I think it's going to find resistance at 75, 76. So I'm not a fan of buying the 72, 80, the prior highs here, because there's not a whole lot of build at this level. You got 2 days here, and then you have nothing today, really. The pre-market dip went there. But I like 70, and I like 70 and I like 66. Those would be my pullback levels on it. Yeah. It's not too large of a zone, but you wouldn't want to place orders all the way through this zone. You'd want to be much more specific in your locations. Yeah. Okay, so let's see here. That's Oracle. We went over that one. David FS, it blows my mind that you have like 100 trades. We have more than that. We have 285 already this year. And that's, keep in mind, that is slightly elevated in the sense of it's elevated to some degree because we have been increasing our scalping exposure. I'm not sure I'm going to be, my scalping experiment is probably going to be done by this quarter. So, and then once I'm done with that, I'll make a final decision. Am I going to incorporate scalping? What aspects of scalping am I going to incorporate? What am I going to not incorporate? So, but after this scalping experiment is over, my goal is on average to do about 100 trades a month. And so David's saying it blows my mind that you have like 100 trades and other people are fighting for 3 trades. Yeah, it just, with 3 trades, I don't know how long a time period that is, if that's, a week or whatever, but if you're only doing 3 trades on a week after week after week, your feedback model is going to be so slow, like very slow, like very, very slow. Each time you make a trade, you get feedback from the market. That feedback is information, which if you have the proper analytics and review process, then you will assimilate that information into your brain. You will assimilate it into your trading experience. And eventually, once that becomes fully assimilated and digested and understood and enacted upon, it increases your experience and skill level. Kind of like a video game, your experience points go up. And so as your experience points go up in the video game called trading, your skill level goes up, just like in the video games. And your ability to spot patterns becomes faster. You start to see more and more patterns. But if it's only 3 trades a week, that is such a slow feedback model. It's super slow. You're going to need, you're going to need a whole year just to gather 100 plus trades. And so think about it. If I'm doing 100 trades a month and I'm able to assimilate all that data and incorporate that into my experience, how much faster is my learning curve versus the same person who's making that in 1 year? I'm gaining the experience in a month that somebody is taking a whole year to get. Who's going to eventually, like if I was a brand new trader, how much faster do you think I'm going to get to spotting good patterns, good entries, being able to manage things, read price action order flow in real time at 100 trades a month versus 100 trades a year? My learning process is just going to be faster. And so if I'm a new trader who's not profitable, but I'm working on it, I'm going to get to profitability much faster than somebody who is, taking 100 trades a year. So in my opinion, in this day and age, especially if you're able to incorporate 2 asset classes, I used to recommend starting off with 1 asset class, but I actually recommend 2 now. And so I recommend stocks and options, or options and FX, or options and futures, or options and commodities, but options and 1 other asset class. And if you're trading both those asset classes and learning them, you should not be doing 100 trades per year. You should be doing a lot more. There are certain traders who are going to, maybe their specialty is going to be leaps with options, which means you do options that are 6 months, 9 months, 1 year out, 2 years out kind of thing. That is going to be much harder to do 100 trades in a year if that's your only strategy. But you can supplement that with swing trades. And so you should still be able to generate more than 100 trades per year. I feel like in this day and age, there's no reason why a trader should be trading any less than 150, 200 plus trades per year on the very low end. And that's like a part-time trader. They can only watch so many markets, so many instruments. I feel like that is at a minimum. That is at a minimum. Yeah. Real traders take the setups they are given, even if it means suffering a drawdown to hit the setup you've been tracking. Risk parameters will protect you from that. Yeah, I mean, professional traders, when they see a trade setup, they go for it. They don't sit there and be like, oh, it's too many trades. As long as you're not outside of your trading plan, and as long as you're not going to hit your max risk or go over your max risk by taking that trade, you pull the trigger. That's, you pull the trigger. That's your job. You don't get paid for not pulling the trigger. You may not take a loss by not pulling the trigger, but you're never going to hit that game-winning basketball shot or score that game-winning goal in soccer or football, or throw that touchdown pass if you don't throw that touchdown pass. There's no money to be made if you don't take the trade. There's no experience to be gained. I mean, there can be experience in sitting back and be like, okay, I'm not going to trade today because market conditions are bad. But if market conditions are supportive and your setup's coming, you need to pull the trigger. So yeah. Okay, I think we've covered everything today. So if you haven't already, hit the bid and hit that like button. Yeah, that little thumbs up. We appreciate it. Hope you guys get benefit out of this. I'm going to switch to live trading with the Trading Masterclass members right now and kind of see what's going on with our positions, and then also some new trades on the day. But thank you for pointing out the Oracle one. I really like this one. I like the structure. I haven't been paying attention to Oracle, and I'm glad you brought it out. So I'm going to add this to my arsenal of trades that I want to be engaged in. So yeah, so I'm liking this one. This is something I'll probably take a position on. I am bullish on Oracle as a whole, and I like the structure right now. So anything else I want to recap? I think that pretty much covers it. Did we get, yep, 15 is strong resistance. Yeah, very strong resistance and selling off. It's already down at $1.60. So if it loses 13, then I think you're going to see a return back to here. So any sort of weak pullbacks in the 15 to me are bearish signals, in my opinion. And not surprising, we're seeing mild pullbacks in the markets today after very strong days. But I think we might see, if the bullish pressure continues, then I think as we have these mild dips, I think you'll see some decent amount of dip buying. I don't expect gangster ranges today in SPY. I think it's going to be tame and muted. But because of that, because volatility is going to be compressed a little bit today, buying dips versus breakout is preferred on SPY and Qs. So that's pretty much it. If you haven't already, check out our latest video. We published our quarterly results for Q1. How did we do? Did we make money? Accuracy. How do we do with the March sell-off when the markets were boom, 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 just getting hammered over what, down over 10%? That was down like 13%, 12, 13%. How do we do? How have we managed that pullback in the markets? Check out our latest video. It's on our YouTube channel. Other than that, good luck trading today. Hit the bid, and also hit that